Global share markets fell overnight. After coming back from the Labor Day holiday in the US on Monday, traders have once again refocused their attention on the European economy. News on the wires over the past few days has once again called into question the validity of the European bank stress tests. Yesterday, the Association of German Banks said that they believe the top 10 German banks will need to raise a further 105 billion euros to cope with ongoing problems as well as stressed sovereign debt holdings. The Kiwi dollar fell slightly overnight and on Wednesday morning is trading just over 72 cents against the US dollar. The Reserve Bank of Australia have left their overnight cash rate unchanged at 4.5% on Tuesday. This was no surprise to forecasters and market watchers, however the choice of words was watched closely. The Reserve Bank left it unchanged for the time being. If not for the global slowdown seen recently, it is likely we may have seen a signal that the cash rate would increase later on in 2010. The Australian economy is in good shape. Currently, they are running at 3.3% economic growth on an annual basis. Inflation is in check and unemployment is sitting at 5.2%, which in context is less than half that seen in the US economy at the moment. The Australian dollar did fall after the announcement, but it is likely to stay strong, holding up the Kiwi dollar as the Reserve Bank begin increasing the rates later on this year. Global dairy markets have been buoyant over the past few weeks, with Oceania prices playing a bit of catch-up to the Europeans. The most recent global dairy trade auction and the price rises were a surprise. We had expected to see some price increases, but perhaps not until later on in 2010. The recent price rises has regained some of the ground lost over recent months, but prices do remain below levels seen just a few months ago. We recently revised lower our Fonterra payout forecast for the current season to the $6 mark, with the potential to get up into the mid $6 range when including the shareholder dividend. With the huge variability in prices we are seeing in the market at the moment, we would like to see prices stabilise at current levels before providing a further revision to this payout forecast.